Hello, everyone. Welcome. I'm so glad you are here for week 9 of coping with COVID. It feels like just yesterday that we were kicking these sessions off together. I have enjoyed so much hearing from you every week and fielding all of your questions. Today is May 18th, and there's some big PPP news. The application for forgiveness from the SBA was released this weekend, and there are also quite a few questions that came through during registration that we'll spend some time addressing. I would encourage you, if you have additional questions, to go ahead and put them in the chat. There is one there already. One person has not heard back from EIDL, and this person applied at the end of March. At the end of March, I would have expected you would have heard by now. And my question, did you also apply for PPP? Feel free to put your answer in the chat, because oftentimes EIDL and PPP applications were combined. Okay, you did not apply for PPP, only EIDL. I feel like you should have heard back by now. I would suggest you go ahead and follow up with your lender, just to kind of see if they have additional information for you. That would be my recommendation, because you should have heard something by now. Okay, more and more people joining. Welcome to everyone who is joining us. Go ahead and keep yourself on mute just for sake of minimizing the background noise, and definitely put your questions in the chat. For those of you who don't know me, I'm Elaine. I love seeing so many familiar faces and names, and I also have loved lots of people who have been emailing, reminding me about when we did a workshop together, or when you may have encountered me previously. So I love that. It's nice to see many, many of you. And those of you that know me know that I am the luckiest person ever, because I get to work with funders and arts councils and other groups all around the country supporting individual artists. And everything I get to do is helping individual creative people with the business side of their creativity. And definitely that has involved a whole lot of unemployment questions and a whole lot of PPP questions lately, not to mention panicked questions about how the arts are going to survive. I suspect you have been seeing the same headlines I've been seeing about the catastrophic impact the economic sort of reality is having on the arts, and will continue to have for a while. What I do know is that things are probably not going to be awesome for a while, but I also know that the creative individuals I work with are the most resilient humans ever. So the arts are going to be fine. It just might be pretty painful for a while, which is why groups like these are so insanely important, so that we can continue to support each other and continue on by sharing creative ideas about interesting ways of making money, or sort of redefining our value, especially right now when it's a good time to be redefining our value, and also just providing a forum to answer some questions, because this stuff is overwhelming and it is miserable. And so if there is a place for you to put some questions, I am happy to be that place. Many of you know from a couple weeks ago, we talked about ending this series at the end of May, but overwhelmingly, I heard that you want it to keep going. So we're going to keep it going. We will not have a meeting next Monday. It's Memorial Day. Technically, it's still a holiday, so I would encourage you to carve out some self-care time for yourself, and don't plan on meeting us next Monday, but then the sessions will restart in June. You all, since you are here and have registered, will get a link to what the sessions will look like in June. So definitely keep coming. Of course, all of this information is educational in nature. This stuff is changing very quickly, and we're getting conflicting guidance almost every time we open up the guidance. And I know that is a source of frustration for many of you, and it's a frustration for me as well. But these are educational sessions. I'm not giving you tax, legal, or accounting advice, but you probably knew that. So today we are talking all about PPP forgiveness, but I thought we would start with the questions that have come in since last Monday's session. So we'll just rapid fire through them. And I'll say one more time, for those of you that joined after the initial announcement, if you do have additional questions you want to make sure I address, definitely put them in the chat. I'm keeping an eye on that, and I will answer any questions that come through. You can send them to the group generally, or you can send them privately to me if you'd rather them not be sort of a public question, and that's okay. Quick follow-up from the question I answered earlier. The person who applied for EIDL and had not heard back, this person did not apply for PPP, and SBA would be getting back to you, and you said that about 2 weeks ago, and you still haven't heard anything. So yeah, I'm sorry, that's really frustrating, but definitely a good moment to go ahead and follow up with them. Also, a quick note in the chat, if you are not muted, I would suggest going ahead and muting yourself. If you pop up on my screen as someone with some background noise, I'll go ahead and mute you. But so no, don't be offended by that. It's just to minimize the background noise. All right. So this person shared this question when they registered. This person is a playwright and TV writer, and 8 productions were canceled, which is really, really brutal. I'm very sorry about that, because that hurts. This person they're a New York-based filer, so they applied for unemployment, and then they were rejected, which is the right process. And then they were granted pandemic unemployment assistance, that PUA program, which is unemployment for more individuals. And the question is, if they do a sort of rewrite gig or something for a week, how do you claim that or report that? So in New York, you are required to recertify every single week that you are still eligible for unemployment. And that includes reporting any earnings you had during the week. So what you would report, let's say you were paid $350 for a rewrite, you would go ahead and report that as your earnings during that week. And that might mean your unemployment benefit in New York will be reduced. I believe in New York, if you earn more than $508, you are not eligible for unemployment for that particular week. Every state has different rules on that. So definitely make sure you are checking your own state's rules. But for this particular person, you would just report whatever you earned during that week. And then the following week, if you had no earnings, you would recertify. The interesting sort of quirk there is that pandemic unemployment assistance is basically your regular unemployment that you would be eligible for. But then remember, there's that extra $600 payment. So if your unemployment, your regular unemployment, goes down to 0 for a particular week, that means you won't get that extra $600 that week either. So just keep that in mind, especially as you are weighing opportunities to figure out what makes the most sense for you long term. And in New York in particular, New York cares about when you earn the money, not when you get the cash, right? So if you do a particular gig and it pays you $350 during the week, you earned that money during that week, even if you don't get paid for a couple of weeks or so. So definitely report any earnings you have as you recertify weekly in New York, and know that any earnings you have may reduce your unemployment for that particular week. Follow-up question from the same playwright TV writer. In the future, will the government ask for bank statements or proof of how COVID-19 affected you? This person's curious about how they will be doing oversight in the future. It's a great thing to be curious about, because there will be oversight and checking. I have not seen any authoritative literature or guidance about how that's going to happen. But what wouldn't surprise me is if randomly they sample tax returns from individuals who did receive unemployment, and kind of just do some spot checking to see, number one, make sure they are reporting any unemployment as taxable income, because it is taxable income. And then number two, also just checking to see what other income may have been earned during the year. And then if there seem to be things that don't make sense, you'll probably get a letter that says, hey, would you verify X, Y, or Z? And that letter will probably come from your own state's Department of Labor equivalent, but they have really good relationships with the taxing authorities. So it could come from either spot. My advice would be definitely save your receipts, definitely keep track of what you're earning. I know we should be doing that anyway, and some of you have heard me drone on and on and on about record-keeping systems and all of that. It's probably going to be exceedingly important that you do that this year, just to make sure all of your proverbial ducks are in a row so that you've got the documentation of any income you received and also any expenses you had. Quick question in the chat about grants received. Great question. Grants received do count as taxable income to you, so you will be reporting that on your income taxes. Different states have come down in different places about whether or not that affects your unemployment. It kind of just depends on what type of grant it is and for what, right? So if you do receive grant money, that could affect your unemployment eligibility. So for you, it might just be a matter of deciding when the grant disbursement should happen, right? You don't always have control over that. And if you receive some sort of award or grant, take it and be grateful. But if there is flexibility to say, you know what, I'm not in a position to make work right now because of everything that's going on, could you disperse the grant in, say, September when things are open? That might not be unreasonable. So definitely keep an eye on that. Clarifying point in the chat, this person saw an article that said the SBA will not be requiring proof of need of PPP. That is a great question or a great point. If your PPP funding was less than $2 million, which I think applies to everyone I work with as a general rule, those individuals do not have to sort of certify or answer questions from the SBA that their funds were received in good faith, right? $2 million was the threshold set by the SBA, and they actually have a checkbox on the application for forgiveness, which we'll touch on in a few minutes, that will help them sort the various people who received loans into different categories. But this is for unemployment, right? So remember, PPP is a loan that comes through your lender guaranteed by the Small Business Administration. If you are someone who's applying for unemployment, the SBA qualification rules or sort of what they're requiring or what they're assuming in good faith don't necessarily apply to you because your program, your unemployment program, is governed by your state's Department of Labor equivalent. Some states call it Department of Workforce Development or various different names like that. So big takeaway, try to do everything in good faith. That's just a good general rule. And those in the creative community do this sometimes to a fault, which is why I love working with creative individuals, and keep really good records and really good track of everything this year, income and expenses. This is a different individual. This person has one copywriting gig that has been sustaining them since all of their normal theater gigs have shut down. And as of last week, it's on pause. And I'm sorry about that because that's a tough thing to have to swallow right now. You also have no idea how long or how short that pause will be. So the question is, can this person apply for PUA? Again, that's that Pandemic Unemployment Assistance. That's what essentially allows unemployment benefits to be paid to more people. So individuals that wouldn't normally qualify for unemployment, like a gig copywriter who is probably paid as an independent contractor, this person would now be eligible for PUA. And this person, I learned, is based in New York. So this person would want to go ahead and apply in New York. Generally speaking, New York has one application portal, and you'll go through and then you'll be rejected for regular unemployment, but then you'll probably be approved for PUA directly. That's kind of how their process is working. And then your first effective date for when your unemployment benefits begin will be the day after this copywriting gig went on pause, assuming the pause lasts for a while. And then the follow-up question from this person was, would you list this gig as your last employer? My suggestion would be no. Again, check the rules in your state. But this person feels like they were a contractor. So that means they would report being self-employed and then the opportunities they had ending as a result of COVID. And New York has a great application guide that you should go ahead and download from their Department of Workforce Development's website, because it shows you kind of exactly how you would complete the application form and indicate that you were self-employed and that you now have a need for pandemic unemployment assistance because everything ended. And if this is an ongoing relationship, with which it is, right, but it's on pause, then the pause is what makes you eligible for unemployment under pandemic unemployment assistance, right? And then if it restarts again, either it restarts just a smidge, in which case you would report your earnings for that particular week, and that might reduce your unemployment benefits, or it might not restart at all, in which case you keep getting unemployment. Or if it totally restarts and it's back to kind of normal, well, then your unemployment benefits would end if you made enough to not be eligible for them anymore. So again, double check your state's frequently asked questions, and definitely get your hands on that New York application guide because that's a really, really good guide as you are beginning this process. A follow-up question. I can't remember if this is the same person or a different person, but this person's income is unpredictable, and it's unpredictable when they actually get paid. So when do they report income? Is it when you invoice or when you receive the check? It is probably when you earned the income. Most states look at when you actually do the work to make the income sort of your right? So let's pretend you have like a 6-week gig and it's going to be $1,000 every week or so. And then at the very end, you're going to invoice the client for $6,000. Your earnings in each of those weeks would be $1,000, $1,000 a week for 6 weeks. So you want to look at sort of when you do the work, that means you have a right to receive the income. That is not an absolute rule, but that's a good general rule to follow as you think about tracking your earnings. Because as we all know, sometimes you will invoice and then not get paid for a while. Sometimes you might get a check now for work you did back in January or February. That money was earned back in January or February, not necessarily now. So this can work in both ways. A question in the chat: what counts as making enough to no longer be eligible for unemployment? It depends on the state, right? So in New York, the number is $508 if you earn per week. You are completely phased out of your unemployment benefits. But in other states, it's considerably lower, right? So if you go to the New York State unemployment website or any state's unemployment website, they'll have an application guide or a candidate guide for normal unemployment. And that's a good thing to scan through, because that will tell you what the earnings limit is before you are completely uneligible for unemployment. Those limits haven't changed. All that's changed is now more people can access unemployment benefits. So that'll be a really good thing to pay attention to. Again, New York's number happens to be 508. That's one that's stuck in my brain, but different states have different levels. And based on what I've seen so far, I've been through probably 25 or so different state unemployment guides. 508 seems to be the highest amount that you can earn before you're fully phased out of your benefits. Another question, what financial information do you need to have ready to do the application? And this is an application for unemployment. Do I need to have done my taxes for 2019? It's best if you have done your taxes. Right now, in whatever state you are applying for unemployment, most states are looking at calendar year 2019 to gauge what your earnings were. And that level of earnings informs whatever unemployment benefits you are eligible for. If you wait another couple months or so, that period that they're looking at will shift. So it'll turn into, April of 2019 through March of 2020, right? So we're looking at basically a rolling 1-year period. But right now, the period that most states are looking at is calendar year 2019. And for someone who's self-employed, your Schedule C is going to provide most of the information any state is going to be asking for. Some states have said very clearly you do have to submit your Schedule C along with your application. Other states have said, nope, you don't have to submit anything, but if we have questions, we'll want to see your Schedule C. My advice is if you can go ahead and get your 2019 taxes done, go ahead and knock them out so you have that information. But in most states, you are not required to have that information as part of your application. Because of course, as we know, the deadline for filing your 2019 taxes has been extended to July 15th. So if you've got some time now, maybe because some of those gigs have slowed down, go ahead and finish your taxes so you don't have to worry about them later and use your Schedule C as you're applying. But if not, there are other documentations you can provide depending on what your state guidance says. Again, bank statements, general ledgers, contracts, invoices, you're going to be looking for the documentation that basically proves, number one, that you were self-employed, and number two, the level of income you had, because that's going to inform what your unemployment benefit is going to be in your state. New question, can someone who didn't make enough in 2019 to file taxes still file for PUA? Probably. Depending on sort of the reasons why you didn't make enough to file taxes. Let's assume you made, say, $3,000. You still made something, but it wasn't enough to require you to file a tax return. That's probably okay. You might have to jump through a couple of new hurdles to kind of prove the income you had, because you won't have a tax return to do that. You'll probably want to think about invoices, or maybe if you have a profit and loss statement that you prepared, or bank statements or something like that. But this pandemic unemployment assistance program that was part of the CARES Act basically expanded the number of people that could be eligible for unemployment, which means a lot of those minimum earnings requirements or thresholds went away or were lowered substantially. So for this particular person, I'd encourage you to go to, this person is from Indiana, so I'd encourage you to go to Indiana's workforce development website and dig into kind of the eligibility under pandemic unemployment assistance. I also know in Indiana, the Indiana Arts Commission did a great webinar with some of the unemployment personnel from Indiana. So if you want to check out some of the recorded and archived webinars, that answers a lot of really good frequently asked questions. Follow-up question, or slightly different question. This person made nothing in 2019, but made $5,000 before March of 2020. Can this person apply for PUA in California? Great question. In most states, and California is one of these states, if you want to use an alternate reporting period, so for you, you wouldn't want to use 2019, you'd want to use basically a more recent quarter for your particular application, usually there's a way to do that. And so I would definitely encourage you to go to California's website and think about or dig into what the alternate reporting period would be to see if the earnings you had in early 2020 could qualify you for PUA. My guess is yes, probably. It probably wouldn't be as high as if you had that level of earnings for all of 2019, but it might be better than nothing, especially right now. Okay. Another question, new question. This person said when they registered, I have questions about investing. Is it a good or a bad time to buy stocks? And I don't mean to be tongue-in-cheek, but yes, it is both a good and a bad time to think about investing. So when I think about, or when I have conversations with people about investing, generally we look at the same things we would do in a really good time and a really bad time. The first thing is, how long do you have before you're going to need access to that money? sort of why are you investing? Are you investing for your own retirement? And then is that retirement 5 years away, or is it 35 years away, right? Because you want to look at the time horizon you have before you're going to need access to the funds. The longer you have, the easier it is to be risky and make investment choices right now, because you don't necessarily care what's going to happen in the next year or two if your retirement is many decades away. If your retirement is right around the corner and that's what you're investing for, I would probably be pretty conservative right now and probably hold a lot of money in cash or other relatively safe investments, and not necessarily think about riskier investments. So your time horizon is the first thing you want to think about. The second thing you want to think about is kind of your overall volume of assets, right? If you are someone who's in a position where you're pretty comfortable, you have a healthy emergency fund that you have access to. And what I mean by that is it's a pot of money, probably in a checking or a savings account, that will cover about a year's worth of you or your household's expenses. So if you have that level of emergency fund, right? Yeah, it's probably a great time to buy stocks, because you don't have to make any decisions about those investments right now. You have this great cushion to sort of protect and insulate you. If you are someone whose overall volume of assets is a little bit lower, maybe you make a more conservative choice right now and not necessarily think about investing, right? It's impossible to perfectly time the market, even though we want to try to do that. And so, every day that you see some dips in the market, if you're watching it closely, you will see people rushing to invest, right? But you will never have perfect timing when it comes to investing, which is why kind of stepping back and exhaling and saying, okay, what's my time horizon? What's my overall volume of assets? And then thirdly, what's kind of my gut check reaction, right? If I invest $20,000 and then we have sort of a 30% market dip, like we had earlier this year, what's that going to do to you psychologically, right? If that's going to keep you from making great work or sleeping well at night, it's probably not a good choice. So regardless of what's going on in the world, if you think about your time horizon, your overall volume of assets, and your general gut check when it comes to your risk tolerance, let those things inform your overall investment choices more so than whatever is going on in the world right now. Question in the chat. This person, okay. So this person asking a question on behalf of their mother. Their mother's a housekeeper who earned $2,400 in 2019 and less than $800 in 2020. Is she eligible for PUA in New Jersey? My guess is yes, with a couple of caveats. I assume these were sort of on the books gigs that she was earning money for. But if they were off the books, maybe not necessarily. But if they were on the books gigs and she earned $2,400 in 2019 and was self-employed, then in New Jersey in particular, New Jersey's rules have been pretty generous when it comes to pandemic unemployment assistance, so that even someone who had a loss in their business for 2019 could be eligible for the minimum unemployment payment per week in New Jersey, which I believe is $168 per week. That's the minimum unemployment amount in New Jersey. So my guess is your mom probably would qualify. I would definitely dig into the New Jersey website a little bit. And again, New Jersey has a great application guide and a really nice frequently asked questions publication that is really, really helpful. Question about a writer writing commissions. This person has $7,000 coming whenever they finish the first draft of the commission. Congratulations. Does that mean you're earning money when you turn that in, or does the earned moment count as when you signed the contract? Or in this case, does it count when you turn in the draft? For this particular process, I would say count it when you turned in the draft. That feels like the moment where you have the right to receive the income. Because before you turn it in, yeah, it's something that's out there, but you don't necessarily have the right to receive the income until you turn in the draft. So I would report it as earnings in that particular week. Hope that helps. This person is a cinematographer, and their question is, how do deductions work for gear purchased in 2019? So assuming the gear is ordinary and necessary, it is totally deductible to you in 2019. Again, the same deduction rules apply. The purchase of equipment has to be ordinary and necessary and effectively connected to your trade or business. So as long as you kind of meet those normal baseline requirements, that's deductible. And then, because you're a cinematographer, I'm imagining big, rather expensive gear. So I'd encourage you to talk to your accountant about making a Section 179 election, depending on how much money you spent on this gear. If you make this election, you can deduct the entire cost of the gear in 2019 instead of depreciating it over time. And that might be something that makes sense for you. Alternatively, if you're talking to your accountant, they might say, no way, you need to show a high net income on your 2019 tax return because you're using it to apply for PPP or you're using it to apply for unemployment. So we want to deduct only a portion of the gear. That means we're going to spread the cost over time, right? So those are the sort of nuances and detailed questions that your accountant can dig into with you as you're thinking about how the deductions for your gear purchased in 2019 work. And then there was a follow-up question from the same person that if this person is paid a rental fee, is that better than a salary? And I might need some context here, so feel free to provide it in the chat. What I think this person is saying is, let's pretend the individual human bought the gear, the cinematographer, and then rented it to the business. And then the business paid that person a rental fee. And what's interesting about that is that I would want to know more about what kind of entity we're talking about. So if you're talking about you, the human, renting the equipment to your own LLC, and that's your own business, that feels like more complication that isn't going to necessarily make sense. But if we're talking about you owning the equipment and then charging a client some sort of rental fee to use it, that could make sense. So again, we want to kind of dig into the details a little bit there. My general answer though is I really like keeping things as simple as possible. There's just enough to keep track of. I err on the side of simplicity. So, we'd want to kind of work through the numbers and see what might make sense. Follow-up question for gear. Do we look at a useful life of 5 years for that particular type of equipment or gear? Probably. The IRS has pretty specific guidelines. It is possible that some gear might fall into that 3-year life cycle. So you might be depreciating it over 3 years instead of 5. But most cinematography equipment, to me, probably falls in that 5-year category. But again, we'd want to double check exactly what the IRS says about those different categories. But 5 feels right. This person, oh, I see. Okay. Thank you for clarifying since I asked for more information. Okay, so our cinematographer is a sole proprietor, and they, for example, would charge $600 a day with or without gear. Is that better than charging $600 without gear and then adding on a $200 rental fee? So we're talking about the amount you would charge a client who is hiring you to do your thing. I don't think it makes a difference, honestly. Cinematography falls into sort of a services type of business, so we don't have to worry about sales tax. Probably you might live in a super special state, but my gut says you probably don't have to worry about sales tax because it's a service-based thing. And it probably doesn't matter if they're paying you $800 or $600 plus a rental fee, because you would still have the same maintenance of the gear regardless. The other thing too is you probably don't want to be in a situation where the client says, oh, I have my own gear, I'll just pay you $600 so I don't have to pay that rental fee, because I imagine you want to use your stuff because there's no telling what kind of garbage the client has. So I would say as a sole proprietor, when we're talking about charging a client, it probably doesn't matter. Tax rate is the same on your labor or your rental? Yes, as a sole proprietor, you're having income from rental fee or from your regular services. Yeah, your self-employed sole proprietor tax rate is going to be the same no matter how you carve that up. So yeah, I don't think it makes a difference. Question in the chat. Is it a good time to buy a house? Another fantastic question. I would say possibly, but if you weren't thinking about buying a house, don't let a global pandemic change what you were already planning to do. But if you were already thinking about purchasing real estate in some capacity, interest rates are really low right now. So it's probably a pretty good time to be borrowing money and buying a house. However, if you decide you want to sell that house quickly because you bought your dream home and it turns out it wasn't your dream home, it's not going to be a great time to be selling a house, probably for the next couple years or so. So I would definitely make sure you're making the choice, not because it feels like a moment you have to seize, but because it makes sense for you kind of holistically. And then in that case, yeah, sign up for a home buying course at your local credit union. Those are fantastic and they will answer so many great questions for you. And then maybe explore some options and see what might make sense for you. Another question in the chat, if this person says they work on commission and lost their work due to COVID and they're not eligible for unemployment, but can you get $600 in Arizona? Oh, great question. I haven't looked into Arizona yet. So if you normally work on commission and you lost your work due to COVID, you wouldn't normally be eligible for unemployment, but you might be eligible for special unemployment, that PUA program that was introduced as part of the CARES Act. That expands the number of people who are eligible for unemployment. So my gut says you might still be eligible for some unemployment. And then if you are eligible for this expanded unemployment, then you would automatically get that extra $600 per week. And that extra $600 per week is paid through July 31st. So that's not a permanent kind of benefit going along with unemployment. It's just something that will go, I think it started March 29th and it will go through the end of July. And in most states, that is automatically being added to whatever unemployment benefit you are eligible for. Now, if you are not eligible for regular unemployment and for some reason you are also not eligible for pandemic unemployment assistance, that expanded unemployment, then you wouldn't also get the $600 because you're only getting it if you're getting either regular unemployment or that PUA payment. And if you'd like, I will go ahead and dig into Arizona and do, as we've done in previous weeks where we've gone through some of the common questions in each state, I'll go ahead and add Arizona to the list. I haven't looked into that one yet. This person's question, if you have an S Corp and you applied for SBA, do you still qualify for PUA? My guess is this person applied for the PPP program through the SBA. There was also that EIDL program, but I'm pretty sure this person applied for PPP as an S Corp. Do you still qualify for PUA? No. The PPP program requires you to maintain the salaries in order for your PPP loan to be forgivable. So you probably do not qualify for unemployment if you got your PPP. Now, your PPP will last for 8 weeks, essentially. And then if things get back to normal, awesome, right? But if they don't get back to normal, at that point, you've run out of PPP. And then at that point, you could be eligible for pandemic unemployment assistance. This person lives in New York, so you would get your regular unemployment depending on the timing of when you got your PPP money and when it becomes forgivable or not. That may affect whether or not you get that extra $600 part of unemployment. Again, that only lasts through July 31st, but you can't do unemployment and PPP at the same time. I will caveat this a little bit more too. There were some people who had unemployment for a couple of weeks, and then they received information that they did get their PPP funding, right? So then they stopped unemployment and went on to PPP. That's okay. You can't have them both at the same time though. So you want to track your weeks very carefully. And here is my favorite question. What if you have W-2 income, but you lost your 1099 income? This is really one of the questions that's driving me a little bit crazy, because we haven't seen a really good answer from any state yet. Here's the way it should work. We know lots of people, especially lots of people in the arts, have both W-2 jobs and 1099 income. So based on my understanding of what the intent of all of these programs are, it's to replace lost income from both sources, right? But what's happening in most states is if you lost your W-2 job, that's sort of the first safety net. And so you'll be getting unemployment from your lost W-2 job. And that usually prevents you from applying for any additional unemployment from your 1099 stuff, which is, it doesn't feel like that's the way it's supposed to work. But no states have clearly addressed this yet, to the best of my knowledge. The other weird quirk is, let's pretend you still have your W-2 job, but you lost your 1099 income. If your W-2 job is fairly well paying, that probably means you're making enough so that you would not be eligible for unemployment in your state. Again, it depends on how good your W-2 job is and how good your state unemployment benefits are. So if you have sort of a W-2 job that barely pays you anything, but it's still something, there's a good chance that you can still get PUA for your lost 1099 income, and then your regular unemployment benefits through PUA would just be reduced by whatever small income you're getting from your W-2 job. But for a lot of individuals, their W-2 jobs are high enough that the amount per week that they're getting exceeds whatever they would have gotten from unemployment. So that makes them ineligible for unemployment. So again, it's a weird quirk, and it feels like it's affecting those in the arts pretty dramatically. I imagine it's also affecting anyone who has a W-2 job and then drives for Uber as a 1099 driver or something like that, right? Because again, people have cobbled together lots of different sources of income, and these systems aren't necessarily designed to account for that. So I will keep you posted as soon as I see a state address this really clearly. Haven't seen that yet. If you have, definitely let me know if your state is super on the ball. But I'm still keeping an eye on some of our sort of leading states who have gotten on some of this information quickly. I imagine they'll be the first people to address it. Question in the chat: in North Carolina, they are not offering the extra $600 if you get PUA. Should they be? Probably. And in some states, it's coming in a separate payment. So it could be that it's just coming in sort of a weird, wonky way. It's also possible that, you know, North Carolina has decided they are not going to do that. That is legal for them to do. States get to decide sort of how they disperse some of these benefits. But in all the states I've seen, the $600 is on top of the PUA unemployment benefit and also regular unemployment benefit. And I will add North Carolina to my list as well of states to dig into to see if I can get a better answer for that question. This person is confused about unemployment eligibility. I know it's really kind of miserable. And they said they have questions related to a gig they sort of have, which completely intrigues me. I would love to know more. But my advice would be, wherever you live, go to the unemployment website in your state and read through kind of normal unemployment guidance. And then there's also probably some extra COVID special unemployment guidance. Skim through it just so that you can inform yourself, and then maybe follow up with the gig you sort of have to confirm if it's something that it makes sense to continue, or if it makes sense to maybe pause it right now, you know, depending on kind of what else is going on. But I'm definitely intrigued by that. This person, I love this question too. They're wondering what the best tax shelters are for a TV writer who has just started their own S corporation. Um, I'm not really the tax shelter gal, but I can tell you that ordinary and necessary business deductions are fantastic. As an S corporation, you can pay yourself a salary, which lets you do some interesting things from a tax planning perspective. Also, some retirement planning options through your S Corp and as someone who's self-employed can be really beneficial for you. And my advice would be to find a great tax accountant whose outlook on aggressiveness of deductions really matches your own. The two tax prep services I generally recommend are Brass Taxes. It's run by a really nice guy named Russ out of St. Louis. It is all online tax prep services, super cost effective. I also really like recommending Peter J. Riley out of Boston. So if you're an S corporation, depending on sort of what your level of income is annually, if you're really looking for some guidance, Peter's a really good hands-on option that could be a great referral or option for you. Okay. The big $1,000,000 question of the day is, how do you make your PPP loan forgivable? And for the past couple of weeks, I've said, we don't know yet, stay tuned. Turns out now we know. With a small caveat, there are still groups clamoring for changes and clarification on a few things here. So there is a chance this will change again. I'm sorry, I know that's driving you crazy and it's really frustrating. But you're going to want to apply for your PPP loan to be forgivable, and that application goes to your lender. I've put a link here on the slide. You can also just Google PPP loan forgiveness application, and I guarantee it will come up because this was released over the weekend. And there's an application and a special schedule and a special worksheet, and then a bunch of pages of instructions. I think it's 11 pages long. So if I were you, I would print it out and read it really well a couple of times because this is what you need to fill out and submit to your lender in order to have your PPP loan forgiven, which means you don't have to pay it back. Now, here's something that's been driving many of you crazy. When you applied for PPP, your application was based on your Schedule C line 31 divided by 12. So basically your monthly payroll amount, right? Under the application for forgiveness, you have to certify, and I've circled it here because it's frustrating that you have to certify this, but you have to certify that the dollar amount for which forgiveness is requested does not exceed 8 weeks worth of 2019 compensation capped at this amount. This is 8 weeks worth instead of 2 months worth, which is really, really annoying, right? So someone shared their details and said I could use it as an example. So I appreciate that person very much. This person applied for PPP, and their 2019 Schedule C line 31 shows $9,539 worth of net income. They applied for and received PPP of $1,987, which is 2.5 times the monthly amount, right? So if you take 9,539 divided by 12, that's $795 per month, or $1,590 for 2 months. However, if you take that same number and divide it by 52 to get your weekly amount, that comes out to $183 per week, or $1,464 for 8 weeks. So for this person, $1,987 is what they borrowed, right? They have to certify on when they're applying for forgiveness that their payroll amount was not more than $1,464, right? Which is a problem for a couple of reasons. The first reason that's a problem is, let's pretend this person had other expenses like rent or utilities, other qualified expenses they could use the PPP money on. If they pay themselves not more than 8 weeks worth of income, that doesn't equal 75% of the total PPP amount, right? That only equals 73.6%. And for PPP to be forgiven, 75% of it has to be on payroll expenses, right? So the solution I would suggest is pay back $35 of the PPP as soon as you can, right? That way, instead of borrowing $1,987, you're only borrowing $1,952. That means 1,464, that 8 weeks worth of payroll, now it does equal 75% of your borrowed amount. And then the rest of what you borrowed can be spent on other qualified expenses like studio rent or utilities. So that's kind of the first issue I see, right, with this 75% threshold, which is really annoying. The second issue that this particular person faced is that they saw an opportunity to get almost $2,000 and they really needed the money. Everything they had stopped basically for the entire month of April, and it hasn't picked up yet. But they don't have any other qualified expenses, right? They don't rent studio space and they don't have utilities on that studio space, nor do they own an office space where they have mortgage interest. And for this particular person, they were not claiming home office or home studio or anything like that in 2019. So that takes that off the table as well. So the question is, can this person use the extra money on supplies or equipment or say a Zoom subscription so they can continue to teach their musician? Can they teach during this period of time or anything else? And the answer is no. The Paycheck Protection Program is supposed to only be used on payroll and rent and utilities, baseline expenses to keep the business in existence for an 8-week period. So the solution for this person could be to pay back $523, that's that extra amount, so that they only borrow $1,464, which is the maximum amount of payroll they can borrow for it to be forgiven. Then the follow-up question, and I have seen conflicting guidance on this. This is a question that the SBA hasn't specifically addressed yet, but we'll see. This person's follow-up question was, okay, can't I just turn it into a regular loan from the SBA and spend it on whatever I want? It depends. My gut says probably not, and here's why. This is what you initialed in the original PPP application. You had to certify that the funds will be used to retain workers and maintain payroll or make mortgage interest payments, lease payments, and utility payments as specified under PPP. That to me says you can't use it on any other expenses, right? But an accounting firm that I really trust and have been sort of leaning on for additional clarification and guidance shared this frequently asked question. They said they were doing a webinar, and one of the questions was, what happens if we accidentally or inadvertently spent loan funds on ineligible items like to pay previous debt? This accounting firm said they are still waiting on a final ruling from the SBA on this specific question, but this firm believes a portion will not be forgiven and you may have to pay back that portion or turn it into a loan. So what's kind of interesting about this is this accounting firm is saying, okay, worst case scenario, that portion is just not forgiven, right? Which is not the end of the world. For this particular musician, right? They're talking about an extra, $400 or $500. That amount borrowed from their lender through the SBA over 2 years at 1% interest, that's not super crazy. If you borrow $400 at 1% interest, that's $4 in interest you're paying a year. So that's not a terrible option if you think you have the cash flow to pay that back during the repayment period. But there was that certification question in the application that said you would only use it on these things. So to me, this is still an open question. If I were in this position watching my cash flow, I would probably err on the side of paying back anything that wasn't going to be forgiven so that the entire amount I received ultimately would be forgiven. But there are lots of other people who will reach a different conclusion. I will promise to update you as this continues to evolve, and as we get additional guidance, the AICPA is one of the groups that is calling for additional clarification from the SBA. They have a big webinar on this on Thursday. You can definitely listen into that, or I'll be listening in. So if you just want me to summarize it for you in a couple weeks, I can do that too. This person submitted in the registration, their question was they hate PPP, which really isn't a question, but I totally get it. This is really, really frustrating. And many people feel like they were misled, right? Because it was presented as an opportunity for your payroll to be replaced with a forgivable loan. And the way self-employed individuals were directed to calculate payroll was based on Schedule C line 31 divided by 12. And when you divide by 52 weeks instead and spread it over an 8-week period, the difference ends up being about 1/78th of your Schedule C line 31 amount. And I understand that for many people, that's not a big deal. In our example earlier from this particular musician, we're talking about $35, right? So yeah, it's not the biggest deal in the world. And I think a lot of people are sort of dismissive of the impact that this is having on self-employed individuals. But for people who really needed that money, it's gone, right? They've spent it, even that extra $35. And so this is now introducing a whole lot of stress as people are figuring out how to adjust based on now what we know the forgiveness guidelines say. So yeah, I totally get it. My advice would be sit down, become really good friends with your lender, right? And work through the numbers. Because if it is a solution or it is a possible solution for you to pay back some of the excess, whether it's $35 or more for you, that could be a really good option. I'd also encourage you to really develop that relationship with your lender if you can, because it's the lender that's ultimately making the forgiveness decision based on guidance from the SBA, right? So they're the ones that are going to be sitting across from you deciding whether or not it's a forgivable loan, which is insanely stressful. And I'm really, really sorry that many of you are in that position because it's really frustrating and it shouldn't be that complicated. And yet this is the world we live in right now. So make good friends with your lender, maybe even add them to your newsletter and, send them a thank you note afterwards and, make sure that they continue to support your creativity, right? They can now be part of your community. And also be really, really diligent about your record keeping, right? So that means transferring money to your bank account when you were talking about payments you're making to yourself, saving the receipts for your rent or your utilities or other eligible expenses. And if your lender says, oh, no big deal, that portion just won't be forgiven, but you can spend the money on whatever you want, get that in writing, right? Because you are going to want to make sure you're protecting yourself and basing all of your decisions on authoritative information you are getting from your lender. So that would be my advice. And I know you hate PPP, and I'm really sorry because it's tough. So that was our content for today. We had a lot of really fantastic questions. Keep them coming. I love the questions. I will look into Arizona and North Carolina unemployment before we see each other again. And then we talked a whole lot about PPP forgiveness. By the time we see each other again, I promise we will have even more information about PPP forgiveness, which hopefully will reduce some of the confusion. And if you do have additional questions, definitely send them my way. A recording of this will be emailed to you hopefully later today, along with a copy of the slides. So you can have that link to the PPP forgiveness application if you haven't seen it yet. We are not having one of these sessions next Monday because it's Memorial Day. So I'd encourage you to take a little bit of time for self-care. I know it's been a rough couple of months for everyone. So take good care of yourselves. Enjoy the hour, spend it not thinking about money. And then I will look forward to seeing you all again at the start of June. We are going to be continuing these on a weekly basis. So keep those fantastic questions coming and we will answer them as much as we can. Thank you so much. I will look forward to seeing you all very, very soon. Bye, everyone.